Hey guys, I should be live here on Facebook. I wanted to come on and I do my weekly Forex trend alert, trend outlook, and chart alert markup session. So this was the last one I did 6 days ago, 10/16/22. So I do them over the weekend, and I like to do these on my timeline so that more people see them. And then if you want to see the other training videos I do, the other lives, I do them in the group, the Forex Smart Money Trading Academy group. Yesterday I went live in the group. I did all the trade alerts for the week starting October 17th, 22. So every week I go on my timeline. I do this weekly, let's see here, where are we at? This weekly trend outlook chart alert markup session. And then when the alerts come out, I go live every day in my Forex Smart Money Trading Academy group and go over the alerts to come out for that day. And then at the end of the week, I do a session like I did yesterday to go over all the alerts again for the week and what the results would be from those alerts. So 2 weeks ago when I did that, all eight alerts that came out would have been winning trades. Well, actually 7 would have been winning trades, 1 losing trade. Last week there were 7 alerts that came out. 4 of those trades would have been taken, 3 winners and 1 losing trade. So strategy works very well, has very high win to loss, a very high win ratio, and you also get a very good risk to reward ratio on the trades, at least a 1-to-3. Try to get at least a 1-to-3, and sometimes you can get a 1-to-4, 1-to-5. So we're going to go over the weekly trend outlook right now. And so to do that, what I do is in TradingView here, I use TradingView and then I use my MT4. I like to use MT4 to determine the trend. So what I'm looking for is I'm looking at the higher time frame trend. So I'm looking for the 4-hour and the daily trend to be in line. Okay, I want them to both either be both bullish or both bearish. And if they are both telling me the same story, then I can mark up a area of interest on the 4-hour chart, which is usually a 4-hour banker candle. That's our area of interest, and that's what we're looking for price to move into. It's a logical area that we're looking for price to move into and then react so that we could take a trade and make money. So in order to determine the trend, I'm going to start. I look at all 28 pairs here. I think I have 28 pairs listed. There may be a couple more. Forex. These are only Forex pairs, no metals or indices or crypto. So just the Forex pairs. And last week I started at the top. So this week I'm going to start at the bottom because I'm only going to go over about 8 or 10 of them just so you see what I'm looking for and how I mark up the charts. And that way you understand when the trade alerts do come out during the week, you understand what the process was to initially get those trade alerts, right? So if we look at UJ here, let's go into our MT4 here because it's just a little bit easier to zoom in and out in the MT4. Okay, on the daily, you can see this has been in an uptrend, and it's also in an uptrend on the H4 on the 4-hour. Now we did have this big move down on the 4-hour chart that breaks structure here. So this is a change of character, right? Because it did make this big move down. But in order for us to get a change of trend, I should say a change of the trend bias, right? Because obviously this is moving up. If we get a 2x2 here, if this would pull back to here and then say drop down and break this structure again. So 2x2 is just 2 breaks of structure, right? So this is kind of the first structure area right here. You know, and you can see it came down and broke that structure. Then if we would get a pullback and then it would come down and break this structure right here, then that would be a 2x2. And that would tell us that the bias for this has changed. But right now, without the 2x2, even with this big move down, which is a change of character, we're still in an uptrend. I mean, if you look at this here, you could see that UJ has been in an uptrend for a long time. Okay, so we're still looking for buys on this pair. Just fix this here. We're still looking for buys. So if we go into our trading view, we're looking for a 4-hour area of interest. We're looking for a 4-hour banker candle. And what we have is we have these two, we have this consolidation right here and this big move up. This is just kind of order flow on the way up here. And so we're going to identify these two candles right here, kind of just put them together and use this whole area here. So this is where we put our alert for UJ. So if price comes down, hits this alert, we'll get an email. And then that's when I go live during the week. Whenever I get those emails, I'll go live during the week and I'll show you the alert and what needs to happen to take the trade. And also show you the results of the trade, either the next day or at the end of the week when I go over the whole weekly session. So this is where we're waiting for this to come down to here. Once price comes down to here, I'll get an alert. That way I'll know to go and look for a trade setup in that pair. If I don't get an alert, then I don't need to look at the charts, right? I mark up the charts over the weekend. If no alerts come out, then I don't need to do anything. Okay. But I get the emails saying the alerts have happened, price has hit my area, then I need to go onto the charts and take care of things. So it's not a full-time job trading. It's just whenever things come out. So that's UJ. Let's move up here. Let's just jump up here to NZD USD. Let's try to catch as many. We're going to try to catch as many different currency pairs as we can here. So if we look at NZD USD, this one's a little bit harder to figure out what's going on here. So to look at the trend on the 4-hour chart, right? If we zoom out here, we see this has been in a downtrend for a while. Okay. If we're looking, we would need to get really we would need to get a break of structure somewhere up here to have a change of character, and then a pullback, and then a second break of structure for a 2x2. Down here, these are not considered break of structures here because there was no new low. Okay, so we're just going to go with the bodies of the candles. We're not going to count the wicks. If you get confused by this, what you can do is you can go to a line chart. Okay, see how I have this black line at the bodies of the candle, even though the wicks are down here. Okay, if you look at the line chart, see how it stops right at that line. So the line chart doesn't count the wicks. And we don't want to count the wicks when we're looking for new highs and new lows and break of structure and things of that nature. So since we have no new lows here, this is structure up here. So we would need to move up here, a break of structure up here to get a change of character in this, and then we would need a pullback and a second break of structure in order to get an actual change of trend bias, right? So it's actually the bias that we're looking for. So this is still considered in a downtrend. The daily, of course, is in a downtrend as well. So we're still bearish on this pair here, which is NZD USD, or we'll call it NU for short. So if we look at NU here, and we did go in last night and mark these up so I can move a little bit faster here. We found this 4-hour area of interest right here, right? And price has almost touched that 4-hour area. So probably today when the market opens later on tonight, this will probably go off and I'll probably get an alert on this. And then what I do after the alert comes out, I show you that in the live videos that I do every day when the alerts come out in my group. Okay, so that is the Forex Smart Money Trading Academy group. Okay, you can see the live videos in here, trade confirmations I post. I'm not able to take every trade that I go over, but if I do take the trade, I post the confirmation. Okay. And so lots of videos in the group here. Okay. So if you want to be able to see those, you need to be a member of this group. So you need to ask me for the link to join. So you can send me a message in Messenger, and I'll send you the link over to join. And when you go to join, make sure you answer the questions. There's just 3 simple questions there. You have to answer those questions in order to get approved for the group. If you don't answer the questions, you'll just get declined. Okay, so make sure that you do answer the questions. Okay, so where were we now? So in NU, we have this 4-hour area marked up. The reason why you want to be in the group is because when the alerts go off, I go live in the group every day, and I show you what I do after the alerts go off, how I mark up the charts, and I mark up the charts in MT4 after the alerts go off. Okay. The reason why I do that is because price is a little bit different in TradingView. We need to use TradingView because TradingView gives you the ability to set these alerts. MT4 doesn't give you that ability like TradingView does. So we set the alerts in TradingView. Once the alerts go off, we get an email, then we can go in MT4, and then we use MT4 to mark up the trade and take the trade. We want to make sure that the price is the same because MT4 is using my broker, right? And TradingView doesn't have my broker listed, so I have to use the closest one available. And so the candles are sometimes a little bit different. Sometimes the wicks are higher or lower, or sometimes even certain candles are bullish instead of bearish in MT4 or vice versa. So there's that trade alert set right there. So now let's pull up NZD CAD next. Again, we're just going to go over about 8 or 10 of these to give you an idea of what I'm doing. So when the trade alerts come out and I go live, you know what the reasoning is behind it. NZD CAD, if we look at the 4-hour chart here, again, this has been in a downtrend. Okay, so if we're looking for a break of structure here, our first break is going to be up here, which is getting close. That would give us a change of character, right? And this is why I like MT4, because you can scroll out and you can get a better look. You can zoom in and out, you get a better look at the overall trend, because this is important, because in order for us to look for a trade in a pair, we have to have both the 4-hour and the daily trend telling us the same story, right? If they're not, we don't set any alerts for that pair this week. Okay. Now I do go in most times at least once during the week, like, sometimes I'll go in Tuesday and Thursday, sometimes just a Wednesday, and I'll check all the pairs again just to make sure if there's any change in this. But most of the times I don't have to, because I usually get, six to 10 alerts just from marking up the charts over the weekend. So this is in a downtrend still. In order for us to get a break of structure, we would need to see a move up above, close up above this area right here, these 2 candles right here. That would give us a change of character, but not a change of trend. Then we would need to pull back in another break of structure to get an actual change in the trend bias for this pair. So this is still down. If we look at the daily, it's down as well. So we're obviously only looking for sells. We're bearish on this pair, only looking for sells. And what we've done is we marked up this 4-hour candle right here, and this is one that was hit. Okay, so we don't have an alarm set on there because we know that one has been hit already. So we need to look for what happens here. So now when I go into NZD CAD here, you'll see these arrows. This is our ATH indicator. This is our proprietary indicator. You have to be a customer in our community in order to get access to this. But if you are a customer, it's free of charge. Costs about $10,000 for the leader of our community to develop. He puts a lot of money in to help us, but you have to be a customer of the community to get it. So since this alert actually went off, I did put the indicator on. You can see I have that 4-hour candle marked up right here in MT4. That's this line right here. And then this line right here would be our stop loss if we were to take, if for this trade. So it's basically, this is our 4-hour area right here, from this line to this line. This is our logical area where we're looking for price to move back into and make a reaction, and in this case go down, right? Because we're looking for that to happen. So this candle's been hit, and now what we do is we drop down to the 1-hour chart. We want to make sure the price doesn't move above this line, because if it does, then that normally invalidates the trade setup, right? So we would no longer look to take that trade. So what we're looking for here is, sometimes we look for if we get like a hammer candlestick pattern or a shooting star candlestick pattern, right, moving into our 4-hour area of interest, then a lot of times we can just take the trade straight away when the next candle opens. Okay, if you open to the next 1-hour candle. If we don't get that, and we didn't get that here, and I show you these during the week when the trade alerts go out. Actually, if you watch the video that I did yesterday, the live that I did in my group yesterday, which is this one right here, you'll see a couple of these trades that we took straight away. I call them hammer time, or the money train trade, whatever we want to call them. When it's a hammer, I call it hammer time, or shooting star. And but basically they're what I call money train trades. Remember the movie Money Train with Wesley Snipes and Woody Harrelson? So it's the money train. So whenever you see those hammer candlestick patterns move into our 4-hour area of interest, that's when it's time to back up the train and load it up with money, or unload the train as they did in the movie. So anyway, this here, we're going to look for our ATH indicator to go off, and we'll only look for the red down arrows, because that's the way we want to go with this. We don't worry about any of these arrows. This indicator is only a confirmation tool. It's not a signal indicator. So we don't take these trades here just because these arrows are coming out here, right? We look for those arrows in our logical area, our 4-hour area of interest, the area where we're looking for price to come back and react, right? We only look for those arrows here. If we get them, right, depending on where they come out, sometimes we can take the trade straight away at the open of the next 1-hour candle. Sometimes we have to wait because prices move too far away from our area, and we have to wait for a break of structure and then a pullback or a double mitigation. And again, I show all this during the week when the alerts come out and I go live in the group. So make sure you are a member of the group so that you can get these alerts that I'm going live and watch these videos again. So this is, we're waiting for something to go off here. And also, since I've turned on the ATH indicator here, I will get ATH alerts now as well. So if an ATH alert comes out on this pair, I'll know to go to this chart to see if it's time to take a trade or not, right? To pull the trigger, take a trade. So all of the trades are normally taken on a 1-hour time frame, right? We look for price to move back to our 4-hour area of interest, our logical area. We're looking for price to move back and react. When it does that, we drop down to the 1-hour. We look to see if we have a hammer candlestick or a shooting star candlestick pattern. If not, we wait for an ATH confirmation. Sometimes we take the trade right after, right when that 1-hour ATH candle closes at the open of the next 1-hour candle, depending on where it's at, where the location is, right? Sometimes we have to wait for a break of structure and then a pullback or double mitigation. And I show all this during the week. So if you don't understand what I'm talking about, the first thing you need to do is, if you haven't got your free week of training yet with our community, make sure you contact me so I can get you the information to that. You'll get access to our community group. You'll get to watch a couple videos there, show you the only 2 trade setups you'll ever need to know. You'll see those, and I'm going to show you one of those today. And you'll get a free week of training starting tomorrow, Monday, 12 p.m. Eastern time. So the experts in the community go live every Monday through Friday, 12 p.m. Eastern time. They've been doing it for 6 years. If you can't watch the live sessions, it's no big deal. I couldn't watch them either. I was at the restaurant during the day. Just get in touch with me. I'll give you the link and the password to access all of the recordings for the week. And that password will only be good for 1 week till the following Sunday evening. So you have to get in there, watch them, because you only get a free week of training. You're not going to learn our strategy in 1 week, guys. It's actually going to take 2, 3, or 4 months to learn the strategy. But you'll be able to try us out, see if you like us, see if you like the strategy. And then if you do, you can make a decision to join the community, and then you get access to everything, including the ATH indicator. So enough of that. Let's go to another one here. Let's look at GBP JPY. Let's see, we're going to pull this one up here. So if we look at the 4-hour chart here, if we zoom out here, we could see that we are in an uptrend on the 4-hour chart. If we look at the daily gets a little bit confusing here, but if you look, the overall trend would consider to be up. You do have this big move down here, this big break of structure right here, but you don't get a 2x2 and then it moves up and makes a new high, right? Break structure on the way up. So we're still in an uptrend on both the 4-hour and the daily. So let's see what it's showing us here. So here on the 4-hour, what we would be looking for is, okay, let me just look at that one more time because I don't have this marked up for some reason here. Okay, the daily is clearly in an uptrend, right? You got to move to this high right here, which gets broken here. So you have one break of structure here, but that's it. And then it breaks structure back on the way up. So daily's in an uptrend, and so is the 4-hour. 4-hour has to be considered an uptrend as well, right? We do have a change of character right here because we get a break of structure, right? Right in this area here, but without we need to pull. If we get a pullback and a second break of structure, then that would nullify any trade setups. But right now we're still in an uptrend. So what we're going to do is we're going to identify this 4-hour candle right here. Okay, so this 4-hour candle here, it looks like it was hit, but it actually, the wick, it actually moved through our area of interest there. So we're going to ignore that area right now. And we're going to come down and we're going to set an alert right here on this area. Add an alert, and there you have it. So if price comes down here, hits this area, then we'll get an alert and we'll know to go to MT4 and see and mark up the chart and see if there's a trade for us to take. Let's go to GA next here. Okay, so we look at the 4-hour chart. Again, we are in an uptrend, right? We don't have a break of structure yet. Anything we have on the 4-hour, we're in an uptrend. On the daily, if we scroll out here, what's this look like to you? Well, it kind of looks like a downtrend, right? So if we look closer here, let's see what we could do there. If we look closer at this one, we get a pullback here and a move to a new low. So right here, right in this area here, we have a break of structure on the way up. We have a pullback, and then we have another break of structure. So the bias on this daily chart, to me, is now bullish, okay? The bias is now bullish on the daily chart. The 4-hour is bullish as well. So even though this has been in a downtrend here, appears to be in a downtrend for a while, The bias is now bullish because we have a 2x2 on the way up. We have two breaks of structure off the bottom here. And so we're going to look for, we're going to be bullish. We're going to look for buys on this. And as you can see here, we identified this 4-hour area of interest right here. We have a little banker's box consolidation here with a big move up. And then it flags back nicely to that area. So we don't have an alert set there because it's already been hit. So if we drop down to GA, we'll see that we have our arrows. So we have our ATH on so that we can get an alert. Look on the 4-hour, right? We marked up that area right there of interest, right? Make that bigger. You can see it right there. And we would put our stop loss down here. So this is our 4-hour area. So we're looking, price has already hit it. Okay. So we're looking for our ATH confirmation, our ATH arrow to come out, the blue arrow pointing up. And then depending on where that's at, we may be able to take the trade on the open of the next 1-hour candle, or we may need to wait for break of structure and double mitigation, right? So that's GA. One that I wanted to show you right now is EURGBP, because this one, we went over this yesterday in the live session in the, when we went over all the trade alerts from last week. This one actually has one of our patterns that we look for, the signature pattern. And if you can see here on the 4-hour chart, what we have is we have this area of consolidation right here. So first of all, looking at the 4-hour chart, if we scroll out here, we were in an uptrend, right, on the 4-hour, but because we have this 2x2 here, right, we have this break of structure here, a pullback, and then a second break of structure. We're now, the bias on this is now bearish. If you look at the daily, essentially the same thing happened, right? We have a break of structure right here. We were bullish. We have a break of structure, a pullback, and then a second break of structure. So we're now bearish on this pair. Okay, we're looking for sales. So it's the bias of the trend that we're looking at. Okay. So even though if you look at this, you might say, well, it's kind of hard to determine really any trend at all looking at the long term. Okay. But the bias right now on the daily chart is bearish. That's because we have two breaks of structure, a 2x2 coming down. So since that is bearish, we're looking for sells. And what we have is we have our signature pattern right here. Okay, so that's this pattern right here. See this consolidation right here of all these candles. And what the banks and institutions will do, and you'll learn this if you get our free week of training, because the first thing you'll do is get access to our Discover a New Way group on Facebook, and there'll be 2 videos there for you to watch. One of them goes over the only 2 trade setups you'll ever need to know. One is the signature pattern. The second one is the banker box. So in this signature pattern here, if the banks and institutions want to eventually move this down, they'll first make a move up and they'll take out this liquidity, because all the retail traders have when they see all these equal highs here, they sell when it comes up to there. So they'll sell there, they'll put their stop loss somewhere up here. So the banks have access to all that information. They can see all the orders that are in, okay? And so they'll just move this up like this. They'll make this quick move up and they'll take all that liquidity in there. Then they'll come down and they'll make a quick move down, because some retail traders will have buys in down at the lows. And they'll put their buy limit orders in down there. They'll put their stop losses down here. And the banks just take all that money. That's what the banks do. The banks and institutions do 3 things, right? They take liquidity. They take the retail traders' money. They mitigate banker candles, and they fill in balance. And balance is something, again, if you want to know what that is, you have to get the free week of training so you can learn that. So they come down here, they take out all this liquidity. They even throw this wick down to here, and just in case there's anything from over here that they could take. And then what they'll do is they'll make a move back up to this candle right here. This banker candle right here is the one they have to make a move back up to in order to get out of their trades at break even. Because in order to move this down, right, in order to initially move this up, they had to buy a lot, right? And then to move it down, they had to do a lot of sales. So they have a bunch of orders in up here that they have to get out of. Okay. So they're in drawdown on a bunch of orders up here. So they'll have to move this back up to get out of those at break even, because they already took all this money in here and in here. And then what they'll do is eventually, this will eventually move down, more than likely. Yeah, we obviously don't know for sure, but that's what it looks like they're doing. We're trying to trade in the footsteps of the bank. That's what our two patterns are doing. So that's why we say the only two trading patterns you'll ever need to know. We don't want to be a retail trader, because 90% of retail traders lose money, right? Because the banks and the large institutions prey on the retail traders, right? So we want to trade differently. So if you look here, if we go to this pair, you'll see that we have our 4-hour area of interest alert set right here. Okay, we have that set right here. So we'll wait for that alert to go off. And actually, if you look on the daily chart here, you'll see that we have a daily banker candle right here. That's this red line, and that's already been mitigated. Okay, that's been mitigated. So we're going to wait for it to come up and mitigate this 4-hour candle. That's going to be our area of interest, because we look for the area of interest on the 4-hour, not on the daily. So if we were looking on the daily, then we would have a trade here that we would need to look at. But we're going to use the 4-hour area of interest for the trades. The other thing, though, but it's always good to look at the daily to see if there's any banker candles the other way that could have an effect on our trade. So in other words, if this does flag up here, it hits here and then it drops like we think it will. If you look down here, there's a banker candle down here where it could stop, right? That's this red line here. And again, if we go back to the 4-hour, we see that this is an area that prices had trouble recently going through. See how it comes down to there, moves up, comes down there, moves up, comes down there, stops, and then moves up. So if we do get this trade here, this could be our initial target somewhere down around here, because we know the price could react off of that 4-hour banker candle the other way on the daily chart. That 4-hour banker candles on the daily chart, right? So when we're looking for sales, our 4-hour banker candle is basically the last up candle before the down move, right? But when we're looking the other way, it's the last down candle before the up move. So that's the banker candle right there that we're looking at for price to react if we do take this trade here. So again, you learn all that in the free training week if you get on that. So make sure you contact me to get access to that. So I'm sorry it's taking a little bit longer, because I'm trying to go over a couple other things with you as well. I wanted to show you that signature pattern. And let's look at, now let's just jump back to the top here and look at a couple of these pairs coming down here that we looked at last week as well. So AUD, CAD, and again, I have these all in alphabetical order in MT4 and in trading view, so it's easy to get to them. So if we look at this pair on the 4-hour chart, this is in a downtrend, right? We have all this action here, but there's not 2 breaks of structure, so there's no 2x2 on the way up. So there is a change of character, because we do have 1 break of structure on this 4-hour chart, but there's no 2x2, so we're still down. And we're still down on the daily as well, right? And, we could say we have 1 break of structure here on the daily, so a change of character. But again, we don't have 2x2, so we're still bearish on AUD, CAD. Okay, so let's see if we look at this. The daily, we look at this on the 4-hour, and this was one that this was a trade alert that came out last week as well. So if we look at this on the 4-hour, really our next area of interest now is up in this area here. Okay, so we also have this pretty big consolidation area here, which could be considered a signature pattern, right? See this big box right here. So we may want to just wait here to see what happens. Again, if this is going to go down again, if the banks are going to take this down further, then what they'll do is they'll make a move up here, which you see them starting to do. They'll take this liquidity up here, they'll drop down, and they'll take the liquidity down below, and then they'll pull back to a new banker candle that's created up here when the move comes down. Okay, so right now I think what I'm going to do is I'm just going to set an alert. So it's already kind of made its move up, right? So it could keep going up further. So we can set an alert right here. For instance, let me get my tool here. We can set an alert right here at this banker candle. And then we can also set an alert down here, just looking for it to come down, because it may come down first, right? It may not get up to here because of this signature pattern we have here. So it could come back to there and then we could take it down, or it could move up slightly, just slightly, and then drop down. So we're going to set an alert down here to look for a break of structure alert. And we're just going to put break of structure here. We're going to mark this so that way when the alert goes off and we get the email, the first thing we do is we come to trading view to see what we had, what the alert was. Because in this case, because sometimes it's a alert to go into MT4 and take a trade, which it would be if it goes up to here and hits this area. But if it comes down here, then that's just an alert telling us that we now have a signature pattern set up, and we'll have a new banker candle that we can send an alert on right here, depending on where this comes. This may come up to here and then drop. We'll get a banker candle in here. So that's this is a situation where we have two alerts. One of them is a trade alert. One of them is just a break of structure alert. So sometimes we'll do that, and in this situation we will. So let's look at another one. Let's look at CAD Chef, or yeah, let's look at CAD Chef. I don't know. CAD CHF. Okay. So let's look at the 4-hour chart and see what we see. Obviously, it's been in a downtrend, right, for a while. So what we have here is right here, right in this area here, you see we have one break of structure, right? We have this move down to a new low. This comes up, closes above the body here. Then it pulls back and we have a second break of structure. So this is now bullish. So on the 4-hour chart, we're bullish. If we look at the daily chart, okay, it looks like we were bullish, right? But we did get what we got was we were bullish. We got a 2x2 on the way down. And so right now we're bearish on the daily, okay? So this is one of these situations where we won't send an alert for this pair because we want the 4-hour and the daily to tell us the same story. We want them to either both be bearish or both be bullish. If one's bearish, one's bullish, one's bearish, we don't trade that pair. We don't set any alerts for that pair. We only want to trade with the trend. We only want to trade with the higher time frame trend. And since we don't really hold trades for a long time, we use the 4-hour, or I use the 4-hour in the daily chart to determine the higher time frame. Now, if we were the type of trader that held trades for a long time, when I say we don't hold trades for a long time, most trades we're out of in 1 or 2 days. at the most at the end of the week, because we don't like to hold trades over the weekend. Because what happens sometimes is over the weekend, when the market reopens Sunday evening, right, you can have a price gap up or down, and this can go right through your stop loss, and you can lose more money than you wanted to, right? So we don't like to hold trades over the weekend. We will occasionally, we don't like to. So we're not long-term traders. We're not even really swing traders. We're more on the day trade, the day trade side of things, because we only hold trades for a couple days or a week at the most. So that's why we use the 4-hour and the daily as a higher time frame. Now, if we held trades longer, we would use the weekly and the monthly maybe for a higher time frame, and we would take our trades, on the daily or the 4-hour. But we look at the 4-hour and the daily as the higher time frames, and we drop down to the 1 hour to actually take our trades. That's our trigger chart, so to speak. So since the 4-hour is bullish, but the daily is bearish, we're not going to trade this pair. Okay, so we probably have this alert here set from last week. We're going to go in here and remove this alert because we don't want to trade that pair. How about the CAD-JPY? Let's do one more here. The CAD yen pair here. CAD-JPY. Look at what we see here. It looks like that it was in an uptrend. Right, we did have a 2x2 on the way down. Right, then we kind of get a 2x2 on the way back up. So we're going to so here's what I'm talking about here. This was in an uptrend. We have this structure right here. So it breaks structure, pulls back, breaks again. So we got our 2x2 on the way down. Then what happens is it moves up, breaks this structure, pulls back, breaks that structure. So we're gonna say that the 4-hour, it's a little bit, sometimes it's a little bit harder to determine, right? But we're gonna go bullish on the 4-hour, and we're also gonna be bullish on the daily, right? So we would be looking for buys on CAD Chef. And so what we had here is we had a couple 4-hour areas that were hit here. We hit this area here. We kind of didn't blow through it yet. But what we're doing is we kind of like this area down here. We like this banker candle down here. It's a nice big banker candle. And the next candle after it is an engulfing candle. Okay. So when the body of the next candle engulfs the body of the candle before it, then that's an engulfing candle. So we like to see a nice big body in our banker candles like this. And then we like the engulfing right after it. So because of that, we ignored this area here. And also because of this big move down here, we don't like the price action here. So we're gonna mark this area down here as our area of interest, because hopefully it can flag down to here nicely instead of impulsively. Straight down would be impulsively. Flagging like this would be nicely. And then we can take a trade back up, assuming that it doesn't have a second break of structure, right? Because here on the 4-hour chart, we have one break of structure. So there's a change of character, okay? So if it just flags down nicely, we'll be okay. Now, if it pulls back here, and then we get a second break of structure, then we have to worry about the trend changing on this. So we may not want to take this trade. So what we're going to do is we're just going to mark here. Check trend. Okay, so if it comes down here, depending on how it comes down, right? If it kind of just makes more of a straight move down here, flags down from here, right? Let me just tell you let me show you this here, because this is going to be the last pair that we go over. So let me see if I can show you what I'm looking for here. I have to use my snipping tool here. Okay. So if it kind of just flags down from here, hits this, we'll be okay. Okay, because it's kind of just one move down. But if it pulls back like this and then comes down and breaks this structure here, then that's our second break of structure because our first break is right here. So now the bias on this will change to bearish, and we won't want to take a long position. We won't want to take a buy position on this. So that's why we have to look and see how things work here. So that's why when we set this alarm here, we also say when we come back, we're going to want to check the trend, right? So that's why I have check trend here, because the first thing that I'll do once that, you'll see when I go live in the group during the week and I go over my alerts, I go over the alerts for that day. When the alert comes out, first thing I do is go back to trading view to make sure it is a buy alert, not a break of structure alert. And also if I have any note like this on the alert. So in this case, I'll need to check to see what price action looked like when it came down into this area. Okay. And then that'll tell me if I have a trade set up or not. Okay, guys, so that's what I'm looking for over the weekend. I go through all the pairs, and I call this my weekly trend outlook and chart alert session, for lack of a better name. We're just looking for the bias. We're looking for the bias on the 4-hour and the daily chart. We want them to tell the same story, right? And if they do, then we can set an alert at a 4-hour banker candle, which is our 4-hour area of interest, right? It's a logical area that we're looking for price to come back to before reacting, right? And so that's what we do. And then during the week, when the trade alerts come out, I'll go live in the group, right? The Forex Smart Money Trading Group. So make sure that you are a member of this group so that you get those notifications that I'm going live, and that you can get on the live or watch the recording once it posts in the group. Make sure you message me for that. And if you still need your free week of training, make sure you message me for that so I can get you access to our community group, discover a new way, and also give you information to register for the training this week. Okay, guys, it's Bill Soriano from Pittsburgh, and make it a great week. Have a great week, guys.